So in terms of today's price action, it was extremely slow. This is not the type of price action I like to be trading in. I decided to make only one trade on the day. At first, it went up about 20%. Then I ended up holding and it didn't work out. With that being said, in terms of today, this was not a good day to be overall trading, especially if you're holding for the bigger wins. I noticed that the price action was not good, so I only decided to make one trade on the day. With that being said, in terms of the newly updated price action analysis, let's get straight into it. So in terms of the SPY, what I want you to be aware of is very, very simple. For the bulls to maintain in control and for us to have another bullish trend day in a row, we're going to need to maintain above $600. And ideally, for the bulls to have a strong day, we're going to need to be opening up flat or even better, gapping up for a gap and go. So in terms of the overall levels, $600, as you can see right here, previous resistance. The SPY ended up breaking above that previous resistance, running to 602. And then it ended up forming higher support slightly above that previous resistance is $600, closing at that previous closing price, $600.65. With that being said, in terms of the bulls to remain in control, we need to be opening up flat. We need to be either gapping up or opening up flat. We need to be staying above $600, right? So in terms of the overall levels, if the bulls are maintaining in control, we're holding above $600, we're opening up flat, or we're gapping up for the gap and go. These are going to be the levels. Previous closing price, $600.65. Gap close reversal. That's the first dip buying level. The next level is going to be previous resistance towards this 601. 601 breaks out, reacts to support. That's going to be the next level for the overall breakout and retest or gap and go if we are gapping up. Now, in terms of a strong level of interest you need to be keeping an eye on, this is like make or break upper resistance, 601.60. 601.60, as you can see right here, previous support. SPY drops back down to test the previous resistance. After it breaks out, you get a breakout, you get a retest, trying to react to support. So if it spikes back up to 601.60, that's that battle zone. If it breaks above, reacts to support, then we're going to be going into the 603.50 to 604 overall range. Now, in terms of the bears, to gain back control, the main play I'm seeing in terms of bearish thesis for them to truly gain control heading into tomorrow, the SPY would have to have a nice gap down below $600. If we're having a nice gap down, there's likely going to be a nice dip and then potentially a dip buying opportunity later at an oversold level. So for the bears to gain some control, we need to go under $600, break down, react as a resistance. But based off what I'm seeing on the daily chart pattern, for it to truly be an overall strong bearish day, really going to need a bearish gap down under $600. So in terms of levels below, if we go under $600, the bears are going to take some control. Next level we go to is going to be 599. Next level we go to below that is going to be 598. And we have a gap that is waiting to fill below at 597.50. So if the SPY is gapping down or if the SPY is reacting bearish in general below $600, the overall call zone is going to be the following. We have this previous support that was not tested in the pre-market, that was not retested at 596.70. We also have a gap that is waiting to fill below at 597.55. That overall zone would be the oversold zone to potentially look to buy calls heading into tomorrow if the SPY is reacting bearish under 600 or if the SPY is gapping down. Like I said, in terms of the main bearish thesis and consideration and puts, it would mainly be focused if we're gapping down. If we are gapping down, I would consider attempting puts towards the market open, especially if we're towards 599 to 600 zone. As long as the SPY is opening up flat, holding above like 599, holding above 600, 660, or if we're even gapping up even better, it's likely going to be another bullish trend day, right? So that's the overall thesis. Very, very simple. If we're opening up flat, if we're gapping up, bullish trend day likely. If we're gapping down, bearish move early into the day likely. And then you can look for a dip buying opportunity at the oversold level, 596.70 to 597.50. So on a bullish trend day, the strategies we're going to be looking to use is the overall breakout and retest, right? And also the gap close reversal. Gap close reversal levels are at 660.65. And then if we're reacting bearish, oversold level 597.75. We have a gap that is waiting to fill below there at 597.53. And then in terms of breakout and retest, key resistance levels, like I said, man, 665, 601, and then 601.50. And keep an eye on that make or break support at 600. So that's the overall game plan. Tonight is going to be very short, simple, and sweet. Like I said, man, it's just been a very slow overall day. So, yeah, man, there's just really not too much to overall say. I mean, in terms of reviewing the chart and price action on potential trades you could have made based off what it is that I teach. You guys are well aware this was one of the levels of interest to buy put options at 598. During the pre-market trading, during extended hours trading session, you could see we did end up crashing at 598, dropping all the way to 596.70. So the level worked out. And then you could see the previous closing price started reacting as support, green, red, green, which is bullish. We had a nice break above that previous resistance level at 598. Then it dropped back down, turned this previous resistance into support, which is bullish. So we had a breakout above the resistance at 598. And then when the SPY dropped back down, it formed a higher floor above that previous resistance. And then in terms of a bullish pattern, we kept on getting the green, red, green pattern, right? You could see right here, we have the green, red, green pattern, green, red, green pattern, green, red, green pattern, green, red, green pattern, green, red, green pattern. And that was forming above the previous resistance levels, which means that this is an overall bullish move for a potential bullish play right here. So in terms of consideration on calls, I would say right around here towards 599. If you're seeing an overall breakout above 598 and we drop back down to retest previous resistance and we're getting a green, red, green overall pattern and we're holding above that previous resistance after retesting for quite some time, it's likely going to try to keep on breaking out. So that was the main overall play. In the morning, we did end up having a play on calls. It's just, man, they took so long to go in the money. We had these $600 calls. They took forever to go in the money. I had a trade. The one trade that I made was on puts. It went up, I think, like nearly 30%. And if you held it, then it didn't work out. If you set a profit stop, so profit stops, you could set those ideally. Starting point would be like 10% to 20% plus. You would have been profit stopped out. But overall, man, it was just a slow day. Really not too good in terms of like for holding for the bigger wins, man. It's just the moves were not big today. But yeah, we had a lot of that breakout and retest today. It's just the moves, they took for fucking ever, and they were just such small moves, man. But you could just see we had the green, red, green pattern, and the previous resistance was right here. Break above resistance. So this is bullish. Buy calls right here. And then your new resistance is right here at 599.50. We had a break above 599.50. And then you could see all of the higher support. We had the green, red, green. We had the green, red, green. So that's just more confirmation to be buying calls when you're seeing these green, red, green bullish patterns forming. When the SPY is breaking above a previous resistance level and the floor is reacting as support, it's going to keep on pushing higher. So remember that pattern because it's going to keep on happening, right? So you're looking for a break above a resistance level, and then you're looking for the SPY to retest that previous resistance level. And then once it retests that previous resistance level, you're looking for a higher floor. You're looking for that previous resistance to turn into support. You're looking for that previous breakout point to react to support when it drops back down to retest, right? And you're looking for that green, red, green bullish pattern, green, red, green bullish pattern, green, red, green bullish pattern for a continuation uptrend, typically could last like for an hour straight. So yeah, just want to bring awareness to that because if you've been watching throughout all the videos, man, that pattern has been working nonstop. When the SPY breaks above a resistance level, you can see this is resistance right here, breaks above, green, red, green. Next hour is bullish. That pattern has happened so many times. I mean, here we go again. Resistance right here, break above resistance, green, red, green, and then it starts to trend up. So it happens in very similar cycles, man. So just look for some resistance on the 30-minute chart. When it breaks above, wait for it to drop back down. If you see a higher floor forming at or above the previous resistance in the green, red, green, you can look to buy calls. So that pattern has been happening a lot recently. I mean, man, how many fucking times? Look at this, man. You have resistance right here in the 30-minute, break above resistance, green, red, green, trends, up trends to the sideways for 90 minutes straight, right? So keep an eye on that pattern. You have some resistance right here, and then the green, red, fucking green, break above resistance. You can see the floor. It's at that previous resistance, right? Green, red, green, uptrends for 90 minutes. Look, man, you get the fucking point. Make your money. The pattern has been working nonstop. And then the red, green, red is the bearish one. But yeah, that was the main play in terms of calls. It's just like I said, man, the problem was the moves were so small, and it took for fucking ever to go in the money. And the moves were just so fucking small. And the contracts, they weren't priced. They weren't priced that well. They were more on the higher side as well. So look, man, it was just an overall shit day to be trading. I recognized it. I only made one trade and then I called it. So it is what it is, The holiday season, things are gonna be in terms of right now, things are just a little bit more on the slower side in terms of the overall price action. But we'll be here every day, and when things start to pick up, we'll be able to capture the bigger moves. So when the market is just more like slow like this, you really want to ease the brakes and trade less. Also, it's very wise to set profit stops, especially earlier into the wins, and just not hold as long potentially, or go as further out of the money. You got to adapt in a sense. But like I said, man, inside of Team Roar, we really didn't do anything crazy today. It was just an overall slow day. We were on the right side of the overall day with those calls. It's just they took for fucking ever to go in the money. Literally buying 600 calls towards market open. So yeah, it's just an overall slower day. On days like these, it's really more about just base hits if you're gonna trade this, more just about scalping. But we like the big wins, so just trade less, sit on the sidelines in a sense. So you got to adapt. And that's exactly what I did. Like I said, I only made one trade on the day. So for those of you who are serious about trading alongside with us, it's going to be the first link down below. Within the overall description, you gain access to our 0-date option trading alerts. We're known for buying cheap, far the money option contracts. We're known for selling them deep in the money. For the biggest percentage gains within the market, we don't use stop losses. The risk is so low. The contracts are so fucking low. You can put in your entire position size as your max risk per trade, and you can just let it go to zero if you like. Your entire position size is your max per trade, a couple percent of your account at most. Contracts goes to zero, the most you lose is what you put in, right? The contracts are so cheap. Like I said, you can actually put in your entire position size as your max risk per trade, right? And these are the highest reward trades, the highest risk to reward ratio trades, right? Every single month we have 3 trades where we make over 1,000%. So if you make a 1,000% return and you're sizing in accordingly, you can literally have 9 straight losses in a row and you could still be green at 100% loss. If you're kind of 50%, you could have 18 losses in a row and you'll still be green, right? So it's a game of percentages. That's what we've turned trading into. We've also turned it into a game of getting rid of stop losses and setting profit stops. If you set a stop loss, that means you lose money. We don't like losing money, right? So we don't get stopped out. If you set a profit stop, that means you make money. You get stopped out for green. That's the difference, right? Everybody who tells you to set, a fucking stop loss, they don't tell you to set profit stops. We're doing the complete opposite of what everyone else is doing. So, fairly simple, a different style of trading for sure. And we're doing this with 0-date options. And we're known for adding to winners. We quickly add to winners, right? So we add to winners and then we increase the winning by adding to the winners. And we move the profit stop higher to ensure that if the market goes against us, we don't get back the bulk of our overall gain, right? So if you want to trade 0-date options with us, it's the first link down below within the description. We have a ton of members and we have an amazing community. If you'd like to experience it and try it out with us, it's the first link down below in the description. You gain access to all of our 0-date options trading alerts. You gain access to the key levels as well. So it fluctuates, man. Some days we have like 1 or 2 trades. Other days when the market's on fire, we could have 3 to 5. Some days we could have 12 trades. It fluctuates. We adapt accordingly, right? But you got to be able to shift with the overall market, man. You got to have that awareness. If not, then you're going to have to be able to afford, a red month, because no matter what strategy you use, there's going to be months where it just doesn't work out. Like if you're just, holding for big wins, going further out of the money, there's going to be some months within the market where it's just more like a scalper market and it's not really for holding and it's not really going for further out of the money. So it's like if you don't adapt, you got to really have proper risk management and a proper cushion. Just things to understand. Like, I remember in terms of March, March this year was one of the worst months to be trading far the money option. It was literally rarely working. All that was working was just going closer in the money and selling the move. If you held, you would have gotten screwed. So adapt accordingly and manage your risk. But yeah, man, like I said, it's just I studied the price action. I studied how we were moving, and man, I was looking in the pre-market and I was just saying, this is just fucking shit, man. SPY isn't doing anything. We're at major resistance and the moves are so fucking small. And we're at some resistance here. Nothing's happening. It just looked like shit. So I had no desire to trade today. And when the market is setting up slow like that, and if you don't like trading within a slow market, I mean you could thrive in it. You're a scalper, but if you don't like slow price action, like me personally, I like, the high volatility. I like the bigger moves and I like holding. If you don't like slow price action, you really got to be able to, be aware of that and just don't trade. And that's basically what I did, man. I basically didn't trade in a sense, man. I just looked at the overall day and it was just shit and slow. And I said, that's not for me. That's just not my style. I need volatile moves. I need big moves. So when that happens, just literally just take either take the day off or just wait for a crazy move to happen. The market can be very slow and then all of a sudden news comes out or all of a sudden something picks up. We get a crazy move. Either the bulls or bears get trapped. And then when the momentum's there and when the big trap was already set, then a potential move is going to be there to take advantage of that momentum of that trap or to take a potential of a reversal later into the day, right? So on slow days, I mainly just like wait for a massive move to happen. And if it doesn't happen, then I usually just won't trade. That's what I would recommend most traders who don't like trading on slow days. Just wait for some sort of crazy bull and bear trap. If all of a sudden, price like something like this, something crazy happens, then I would be interested in a trade. But if we're just moving very, very slow, it's just not my type of style, man. It's very hard to time that perfectly in a sense. It would have to be a very special price zone, right? It'd be different if we were at different levels. I mean, the levels right now, we're also not at the most volatile levels in a sense. We're having very small moves. These are very small bracket levels. Like I like the wide levels. I mean like 500 and 598. So if this cracks, we go to 595. That's a 3-point move. So if it reacts to support, we can potentially go to, 3 points higher, 601. So I like trading at those big bracket levels. So in terms of today, like the big bracket level was 598. I mean, the chart gave it all away. If 598 reacts to support, we're going to 601. If it reacts as a resistance, we're going to 594. Well, it was very clear. We had a breakout above 598, and we had higher support, and we had many green, red, green patterns with more breakouts. It's just it took for fucking ever to hit that 601 measured move, right? So yeah, man, that's really just what I wanted to bring awareness to in terms of today. For those of you who like to trade alongside with us, it's the first link down below within the description. We will see you guys tomorrow within the chat. We're gonna absolutely crush it, man. I'm telling you, market's looking a lot better than it was in terms of today. It should be a nice day, man, especially if we're opening up flat or gapping up. Nice bullish day. But we got to ease the brakes a little bit because we're not in the most volatile opportunity as of right now. But things will pick back up, and we'll be able to capture that opportunity. So yeah, if you'd like to join us, it's the first link down below within the description.